Welcome to This Week in Money. I'm Jim Goddard. Today, CIBC Wood Gundy's Ross Clark says despite the panic, equity markets survive a very bumpy week. Martin Armstrong from Armstrong Economics talks about the government bubble and how it makes the future of any incumbent politician very questionable. We'll talk to Ross Clark right after this.
Unbelievable harmonies, spectacular performance, Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. In Oliver, October 2nd. In Kelowna, October 3rd. Buy online and save at ontourtickets.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark, investment advisor at CIBC Wood Gundy in Vancouver. Welcome back to This Week in Money, Ross.
Well, it was quite the week that we had here, Jim.
Yeah, it was like a ride on a Six Flags amusement park roller coaster, one that they haven't even built yet.
Yeah, it's still in the design phase, and they're asking for opinions on whether this one was just a little bit too far for most people to take a ride on.
I thought the oxygen masks were a nice touch.
Well, yeah, I on Monday morning, when actually the New York Stock Exchange changed pulled one of the rules in terms of allowing the market to open faster and therefore not having all the bid-ask spreads posted, we ended up with far more volatility than we should have had. So you ended up with down 1,100 points in that first couple of minutes on the Dow, only to bounce back fairly dramatically, to put it mildly. So, at the end of the week, here we are unchanged to higher in most of the indices after having had one of the biggest swings, not only in terms of absolute numbers, but also in terms of percentages. So, we've been thinking that we've got this long-term 7-year cycle we've been looking at. The key supports were going to be around a 5% level and then once again down around 10. The S&P intraday there on Monday, we were down about 12.5% at worst, bounced back big time, retested that low midweek, and then came on reasonably well for the last 2 days of the week. It's interesting. The technicals really start to shine when you get into these emotional periods because they tend to be patterns that are quite repetitive. And if you look at the last 2 weeks, intraday, if you look at the hourly charts here in terms of this waterfall effect that happened into Monday and then the ensuing action afterwards, it's an overlay of 1987 on the daily charts. And it's, if you take a look as well, it would be similar to the 2010 hard correction we had in the market and the way they walked back. So looking forward from there, unless it's like October of last year, October of 2014, which was just a V-bottom, straight down and then right back up for, I think it was 3 consecutive weeks, almost every day. Other than that, the norm here would be that we would go into a fairly choppy phase, and if the early part of the week doesn't have any good upside follow-through, you probably give back a good 60% of what we had coming off the bottom. And the norm in this 7-year cycle is that we would go into its consolidation, might last maybe the better part of 3 or 4 weeks in a broad trading range. And as long as we can hold that will set up then to put the seasonal low in place and give us the opportunity to rally well into the fourth quarter and through to next year. The key, though, is how well we hold in this next couple of weeks. So one's going to have to hold their breath still for a little while longer, I think.
I know usually when equities look like they're in trouble, people panic and then they run to gold. Did we see that happen this week?
This was one of the disappointing things as far as the gold market was concerned, and it is a continuation of what we've been seeing for the last few months. If we look at what happened when the Greek crisis came to the forefront, gold market there just couldn't rally, and as soon as things subsided, the gold eased off. We saw the same thing with China when it started to implode. Gold held but could not put on much in the way of a gain. And once again, in this last 6 or 7 days, we've seen the gold market get up to the resistance level, that 1155, 1160 range. But on Monday, it just couldn't put anything further on. So As soon as things started to stabilize, gold immediately dropped back, closed down at 1123 was the low close this week when it corrected. We've been talking about 1120 as the key support. Closed back at around, I think, 1135 at the end of the week. I think that 1120 should be looked at as a line in the sand, but unless it can really put on something during this period of seasonal strength, which carries us from mid-July through September, I'd be pretty cautious about the fourth quarter as far as the gold market's concerned.
Crude oil and high yield markets, they seem to be marching together in unison.
Well, very much so. You know, in the last couple of years, so much money was raised through the high yield market to finance these energy companies, and a disproportionate enough. I mean, there's always money raised for the sector, but in the last few years, it's been very, very high. And when you overlay the oil chart and the high yield chart, the JNK ETF, they're basically lockstep day by day. And into this week, we have what I call, by definition, a capitulation. I have specific readings that are necessary for that. So we had weekly readings on both the oil and on the JNK. We had some daily readings also on the inverse ETF on oil. The DNO was up into exhaustion levels. And so we've had a really big reversal. I think oil market, you got a $7 move this week, $38 up to $45. And I'd expect to see that that $45 to maybe $48 becomes a pretty heavy overhead resistance, but probably doesn't go straight down right away. Probably does a bit of a rolling style of top, which is the way oil has been reacting in this last year or so.
People in that market are still optimistic somehow.
Yes, they still are, and it will be interesting to just see how the sentiment readings start to kick in. We've had some very, very bad sentiment, but most people that are calling in are not looking to be sellers. They are looking to try and find bargains, and that's something that's always disconcerting. I'd rather, a bottom usually comes when everybody's given up on something.
Ross, thanks a lot for chatting with us.
Thank you, Jim.
My guest has been Ross Clark, investment advisor at CIBC Wood Gundy, Vancouver. If you have any questions for Ross, you can email him at ross.clark@cibc.ca. Coming up next, Martin Armstrong on This Week in Money.
Always consult your investment professional before making any investment decision.
Unbelievable harmonies, spectacular performance. Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon & Garfunkel. In Oliver, October 2nd. In Kelowna, October 3rd. Buy online and save at ontourtickets.com.
This Week in Money is archived online at talkdigitalnetwork.com.
My guest is Martin Armstrong, CEO of Armstrong Economics. Welcome to This Week in Money, Martin.
Well, thank you for inviting me.
We always want to know how the movie The Forecaster is doing.
Well, outside the United States, it's been actually phenomenal. I'm heading back out there for it. They're going to do a live broadcast of it to 13 countries from Athens, actually. So I'm going off to it's debuting in Paris. I think around the week of the 15th of September, so I have to go to Paris, I have to go to Rome, and then off to Athens. The Athens is going to be broadcasting it live to 13 countries. So,
can you just give us a thumbnail sketch of what the movie's all about and your role in it?
Basically, it's a film that really shows what has been going on when actually, when my issue began, I mean, it was quite amazing, but, I mean, everybody knew that, the banks and the New York players were always manipulating markets and doing whatever they could. And so I used to report, hey, they're back. I wouldn't say who, but we would report, they're going to manipulate this one, be careful. And so I had backed up, like any type of journalist. I had, just in case somebody would try to sue me, I had tapes on absolutely everything. So, what's interesting is that that seemed to be one of the things that they were after, and the court appointed receiver, who was the judge's former law clerk, then grabs everything, threatens to throw all the lawyers in prison, and unless they turn it over, he turns it over, and then he suddenly becomes a board of directors at Goldman Sachs. And so he then runs our company from the board of Goldman Sachs and didn't resign from the court. So he did, both private and public at the same time. Totally, conflict of interest, but, they just don't care. It's kind of like Hillary. It's like, I raised 31,000 emails, that's your problem.
One of the people I interviewed earlier this week said you should check out Martin Armstrong's theory of government bubble. We have money bubbles, housing bubbles. He says we have a government bubble. Maybe explain that to us.
This is, you can go to our site and you'll see we have a chart on there. We've, have interest rates back to basically 3000 BC. So, that's, that is one of the primary things that man has recorded all the time. Hammurabi's code recorded interest rates and commodity prices. It was really wage and price controls. So we have a lot of data documenting things all the way back, and what we're facing right now, this is a 5,000-year low in interest rates. You can't get any lower than this. So effectively, this is really a bubble in government, and you can see it if you just look around. The whole world is going crazy. Politicians are just not, they're regarded as the worst scum of the earth, really. And a lot of people in the institutional, or I would say the mainstream media, are just so bought and paid for. You can see them, how they're attacking Donald Trump, for example. They can't stand the idea of anybody coming in and upsetting the apple cart. But what is got everybody, actually very wise poll, the polls showing it, Trump's doing so well, and the one unifying thing is that they know he's not bought. And actually, I got a memo. It was really funny. The Republicans had a focus group, and they hired this firm to basically try because they want to, attack Trump. They want to get rid of him. And so they had this focus group, and they showed them every possible negative thing that they could about Trump, and to see what their reaction would be so that they could come up with some sort of formula. By the time they were done, the people liked Trump even more. And so the internal memo is, you guys better pay attention. This is serious. Look, if you put in Hillary or Bush, is anything really going to change? I think what Obama did more than anything was that he showed that it's impossible to change. It doesn't matter, Republican, Democrat, they all do the same thing. Obama stood up and said, Bush is acting unconstitutional with the NSA, and he's done 10 times worse. So that's why, Trump is doing so well. It's also why Bernie Sanders is doing so well inside the Democrats. You're seeing third-party type atmosphere rising in Scotland, throughout Europe, everywhere. Because this is a peak in government, and I think everybody has realized that this is it. It never gets any better, and they just keep taking everything they possibly can take.
Well, in Canada, the recent polls have the leftist NDP leading Conservative Prime Minister Stephen Harper, and down the middle, Justin Trudeau for the Liberal Party.
It's up until now, it has been basically who's ever in power, throw the bums out. But what Trump is tapping into is this attitude that people don't trust either side. And you can have them, stand up, vote for me, I'll tax the rich, etc. Does it ever lower anybody else's taxes? No, it just puts more money in their pocket. And then they get lobbyists coming, okay, fine, well, I'll reduce your taxes, you give me something. And it's a joke. It's a complete joke. We have Bonner, the head of, basically in the House, Not a single bill can be presented to be voted on unless he approves. So that's why he raises more money than anybody. Everybody pays him. You look at Hillary. I mean, that's another joke. She becomes Secretary of State, sets up some charity, and who are all the donors? All these foreign governments. Come on. I mean, if anybody in the private sector did this, you would go to prison.
Why is it if we lie to the government, we go to jail, but if the government lies to us, nothing happens?
They have inverted everything. The U.S. Constitution was designed to be negative. So therefore, you were presumed to have rights. And it was a negative restraint upon government. And what has happened is the courts have flipped it so that they get to do anything they want to us. You have to go to court and prove you even have a constitutional right. They did this to me. Okay. Well, we think it was okay, whatever. They get to do whatever they want first. And that's not negative. That's a positive totalitarian right to them. So it's really seriously screwed up. And I think it's taken its toll. If you look at unemployment in Europe, it's disastrous. Spain, they're doing relatively well compared to some of the other countries, and they only have a youth unemployment rate of about 31%. You go to Italy, it's more. You go over to Greece, it reaches 52%. Now, this is 52% of the younger generation can't even find a job. In the States, you had Forbes magazine come out and said 65% of the kids that go to college cannot find a job in what they have a degree in. Yet the bankers lobbied the politicians so that, okay, fine, student loans are not dischargeable even in bankruptcy. You can discharge everything but a student loan. Why? And so these kids can't even, they're living with their parents, they can't even effectively get a mortgage because they owe so much. So up there in Canada, your ministers came out and said that, the youth that are living with their parents and they can't find jobs, well, they should go to work for free to get, some experience for their resume. That's very nice. Well, politicians should work for free too.
Yeah, I don't see Finance Minister Joe Oliver turning his check back. In fact, he even said, don't worry about what's happening with government. Our grandkids can pay for it all.
Yeah, it's basically the reason Thomas Jefferson was so against any kind of a national debt or something else is because effectively he said, and people don't look at it this way, but it's correct. It is basically you have taxation without representation. So your grandkids are going to have to pay taxes for something that they didn't even, vote on, had no say on. That's not democracy.
We're speaking to Martin Armstrong of Armstrong Economics. Your economic confidence model sees 2015.75 as a major turn date. What is the actual date, and does it look like this turn date signifying changes in markets, or is it signifying something else?
This is basically the peak in government, and the date is September 30th, October 1st. It's like 0.6 on a day, so it depends, which it could be the Tuesday or Wednesday. But that's really what we're dealing with, and it's you can see it coming. You've had the stock markets decline, etc., and what has happened? That sends more money into government bonds. So, for example, the U.S. 10-year rate fell below 2%. The 30-year bond rate fell below 3%. This is the bubble. Just like a housing bubble, a stock market bubble, whatever, this is a bond bubble. Are you really, willing to say to the government, here, I will give you my money and you can hold it for 10 years and just, go negative? I'll pay you 10% to hold my money for 10 years per year? It's crazy. So, it's really off the charts from a technical analysis perspective, but, what's going to come after this is very, very interesting. I mean, the markets are responding, and you can see them setting up for this. And we have a massive wave of deflation in commodities, etc. We have really the cost of government is going up exponentially. You take Chicago, for example. To pay for their pensions, it's not your grandchildren, it's you. They have to raise property taxes 30%. And the way government has looked at this, it's really their money. We still live in basically a communistic type state. They just let you own your house, and it's technically in your, titled in your name. But if you don't pay the taxes, they come and take it. So your house is basically not your castle. And it's just, a lot of it's just propaganda. So they have abused every possible thing they can. And they just line their pockets with everything. So at this stage, throughout history, we reach these points about once every 300 years. And from the politicians' perspective, they don't understand it because, well, you never got mad when I stole $10. You didn't get mad when I stole 100. You didn't get mad when I stole 1,000. Why are you suddenly getting mad when I'm taking 5,000? I thought this was okay. That's the way they see it. This is the way it's always been done.
What about this huge wave of civil forfeiture? I've heard between $2 and $3 billion has been seized from Canadian tourists in the U.S. by the police because they say, hey, buddy, you've got $500 in cash. You can't explain where you got it, so I'm taking it.
They're doing this everywhere. In Europe now they have, okay, fine, they issued 500 euro notes. If you have them, they're confiscating them because, you're most likely doing something illegal. They printed the money. Now they're confiscating it. And I know somebody that went, wasn't British, but went to Britain and sold some watches that he had for cash. And then he left. They found him with about 30,000 pounds in cash. They confiscated it from him. He said, here's the receipt. No, I don't believe it. They just took it. In Europe, anybody traveling, be careful because basically you get on a train and a friend of mine was on a train over there from Switzerland to Luxembourg and the train goes through France. They stop the train, the French financial police come on and they start searching everybody's bags looking for money. I mean, it's just getting to be really ridiculous. And we're moving towards, a full-blown electronic currency. They're going to eliminate paper money. And by 2016 in Europe, this is the way a politician presents something. It's like you have a constitutional right to have a bank account. So they basically have made a decree that everyone must have a bank account in Europe by 2016. It's not a right. It's just simply so they have a right to confiscate whatever you have. If once you have a bank account, then they can eliminate the cash.
Well, I hear right now you're not allowed to take out more than 750 euros at a time, and they plan to cut that back in the future.
It's even less than that in some places. I mean, I've gone to Paris and I can only get 200 euros out of an ATM. That's it, and that's for the day. So you can't even buy dinner. It's illegal to pay for a hotel for more than 1,000 euros in cash. It's not allowed to be done. Most of the antique dealers, etc., there used to be shows in Paris. The French government said they wanted a list of everybody that attends and what everybody bought and sold. The dealers just said, no, we can't do that, and the shows moved to London. They are hunting money like you wouldn't believe. It's like pigs going after truffles or something. But and they're sniffing at everything they possibly can. They're broke. They're destroying the world economy, absolutely destroying it. And, they got all these countries now all agreeing, spying on everybody, and it's all for money. And, people don't realize even the Vatican, they threatened to take the Vatican out of the SWIFT system, the same thing they did to Iran, unless Vatican turned over information of everybody with any money whatsoever, any bank wires that they do.
We're speaking to Martin Armstrong of Armstrong Economics. Martin, can you see the Dow going lower this year? We had that huge shock at the beginning of the week where they had the biggest drop ever in the Dow, and then 3 days later, the biggest increase in the Dow. Can we predict what's going to happen to it?
Yes. I mean, the Dow, it came all the way back down to 15,370. Last year's low is 15,284. Honestly, if it takes out last year's low, we should dip back down to retest support. But if we take out last year's low, it will go down into next year, possibly early 17, before flipping back up. But this kind of volatility, what's going to happen, I've just, published a chart like, for example, what the Dow has done several times before. When you get into these financial crises, I mean, it has the potential of going down, making a new low next year, and then flipping around and soaring right out through the highs. And it's done this numerous times. And it basically, you get everybody that was long, you get them short, and then when they're short, they turn them, they stop everybody out and take it up. It's total confusion because people do not understand what's really happening. And that's our biggest crisis. When you say the word crash, they immediately assume you mean stock market. And there are other things that crash besides stocks. And this time it's going to be bonds. So we're looking at major, serious issues where why the dollar can go up so high is you have, since 2007, $9 trillion issued in debt by foreign governments. So they issued it in dollars largely because to save interest rates. And as the dollar goes up, now they have foreign exchange losses. And we're going to see massive defaults. It's just the way it is. I mean, if you had your mortgage there in Canada in U.S. dollars, and the dollar's, up, the Canucks down, 20%, you suddenly now owe 20% more in your house. I mean, this is basically what's going on a global scale.
Yes, well, the poor Canadian dollar, we've gone from $1.10 a few years ago to around 75 cents. That's a huge shock to your pocketbook, especially if you're buying imported goods. And the price of oil in Canada is priced in American dollars. So we're not enjoying the big drop at the pumps Americans have.
No, it's currency is a very critical issue. And when, most of the big companies we get called in or in crisis, it's always foreign exchange related. And it's, it's just the way it is. I mean, you have tremendous amount of losses because of the Swiss franc pegged to the euro. And when the Swiss had to let it go and then the franc went up 30%, that was, pretty much it. I mean, you have people with all kinds of Swiss franc mortgages in Britain, Eastern Europe, because the bankers sold them this. Oh, you can save money on interest rates. Nobody ever tells them about the foreign exchange risk.
Gold and silver, have they bottomed yet?
No. The main thing that gold is going to respond to, and you have to realize there's just so much propaganda put out by these people that sell the stuff. Okay, so it's like a used car salesman. Oh, this car was driven by a little old lady, and all this other kind of stuff. It's the same thing. So they constantly talk about fiat and inflation. And look, you can do a correlated study. I'm sorry, gold does not rise with inflation. The only thing gold really responds to, as it did in 1980, was very simple. It responds when people lose the confidence in government. We haven't done that yet because we're in this bubble where people are rushing to government and handing them as much money as they possibly can at negative interest rates. So obviously they're not at that point where they don't trust government. It's coming. And we may see, this, we have to get past this turning point, and then things will begin to percolate up a little bit, and then we'll see the flip. But to make, gold go back up, we have to have a crisis in confidence in government. And this is even what Donald Trump is showing. Most of the people that he's bringing in, one, he's doing a great job for two things. One is that he's bringing in a lot more people registering to vote than who have never voted before. So he's bringing in a lot of the youth and stuff that simply don't trust politicians. They've watched it all along, and Obama, some people would say, oh, well, black president's never going to get elected again, or so. I don't think so. I don't think, they're putting it on a racial type thing. What Obama did more than anything was show that there was no difference between him and Bush. So why should you listen to anything? And you can see, Hillary's approval rating or trust rating is down to like 37%. Nobody trusts her.
Do you have any predictions on what's going to happen in the Canadian election?
I haven't actually looked at the Canadian, but really what I would expect is you're going to see the same thing. People are just getting fed up with the status quo.
Well, that's what the polls are showing right now, something like 67% unsatisfied with the job the Prime Minister did.
It's not just Canada, it's absolutely everywhere you go. There's separatist movements. Scotland wants to leave the UK. You have the UK is going to have a referendum to leave the EU. Everybody wants out of everything else. You got people in Staten Island want to leave New York City. It's just, there's other people talking about California that should be split up into 7 separate states. It's everywhere because government is totally out of control. I believe honestly that everything really should be pretty much privatized. I know people go, but look at it this way. They promise these people pensions, etc., but they don't fund it. So if they worked for a private company that bid for some, whatever it is, motor vehicles or whatever, and run it, and the boss didn't do that, he'd be in prison. You can't prosecute politicians. They can change whatever they want at any time. So, anybody who wants to work for government and really think you're going to get what they promise, good luck, because they keep changing it. They keep raising retirement ages, reducing benefits. It's simple as this, is that you take like a municipality, and that's really where illustrating a real problem. You take these municipality governments, let's say they had 20 policemen, 10 retire. Well, they never funded their pensions, but now they got to pay them. So now they can't shrink the size of government, so then they have to hire 10 more. So now the cost is for 30 policemen. And the way government has functioned in every country I've gone to, it's always the same thing. There's always enough schmucks out there for us to tax. So they haven't funded anything. Every time they need more money, let's raise taxes. There's never discussion about reforming government, looking at how can we save money. Is there, you take the crisis that we had in 2007. There were 7 agencies in the United States. Each had to approve those notes that blew up the world. And the second agencies, did they approve it? Okay, well, we'll approve it too. So you have 7 of them. Each one just rubber stamps, and none of them even understood what they were rubber stamping. It's a joke. The whole thing is a joke. And it's just reached this bubble point where it's just not working. And no matter what we do, we've reached a point it's gone too far. And even in Germany, for example, you're going to see a huge economic crash there. You have the municipalities. The vast majority, more than 50% of them, are bankrupt. The government's talking about putting in a 15% income surcharge to bail out the municipalities. The average person pays over more than 50%. Where is all this money going? It's just going to government workers. That's it.
I'm Jim Goddard. We're speaking with Martin Armstrong from Armstrong Economics. How low do you think the price of oil is going to go?
Well, I think once you see a yearly closing in oil below $35, it will go back to about 12, 15 area. And what you have to understand is that the technology has advanced tremendously in batteries, etc. You're starting to see a lot more electric cars. I was just in Amsterdam. The taxis at the airport were Teslas. So you have cars being much more efficient and than they ever were before. So you actually you can look at the trend. Right there, Washington State is actually in Oregon, and a few others now are starting to look at, because their revenue on gasoline has been declining. So what are they doing is that they're now looking at putting in a tax on your odometer. So it'd be a tax per mile that you drive. This is what they're looking for. They never, you take cigarettes. I mean, here's another joke. I mean, they say, oh, well, we're going to put this tax on because they're not good for you. Well, if they're not good for you, they could have just outlawed them. Well, no, they can't do that because they have a lobby. So, okay, and then what happens? They make all this money from cigarettes. They like that, actually. They hope more people would smoke. And you can see why I say that. Because as their revenue declines, what do they want to do now? They now want to tax electronic cigarettes.
Well, I believe the Japanese government, which has the monopoly on tobacco sales, wants people to smoke so that they die and they don't have to pay them a pension.
Well, Japan has also a very unique problem. And as the confidence in government has declined, so has the birth rate. And Japan barely had about 1 million, children even born last year. They call it the celibacy syndrome over there, and they're not even dating. And the same thing here in the United States and Canada. You see the birth rate collapsing. In Russia, you have the government offering women to please have children. They've rescinded the one-child rule in China. As taxes have increased, the youth are not, it's not like the good old days. Even, the marriage itself is going back to where it really was. It was really Hollywood that kind of made it so that the same age, applied. But you go back effectively to the 18th century, usually the man was about twice the age of the woman, and this was all because of there was no socialism. So what would happen? He would have to go out and get the house, the farm, the chickens, and then go, go to you and say, okay, fine, I'd like to marry your daughter, and you would say, okay, fine, what do you have to take care of her? There was none of this stuff that was like, oh, nothing, but I love her, He would have laughed and slammed the door. So the attitude of same age thing has come in largely because it's changed everything socially. When they inputted, from the Great Depression, they created this socialism, this safety net, so to speak. Kids no longer save to take care of their parents. Oh, that's the government's job. So it's changed everything. And where before you would have 5 or 6 kids, and that was your retirement. It was a family unit. And you still see that in Eastern Europe. You see it in like Mexico, places like that. But in the West, in Europe, North America, even Japan, doesn't exist.
Do you see the economic turmoil in China reducing their chances of being the next superpower?
No, I mean, I think China responds very quickly, and this is just a part of the process. I mean, they had a good run up, and it was basically 19 years, and after that, it's really just in a correctional phase, and then China will eventually, surpass the United States and become the largest economy in the world, both for capital and volume size. But I mean, that's natural. I mean, it's basically where we're going. the West is committing suicide like every empire always has, because effectively you just tax them to death, and eventually they just leave. That's it. I mean, there's no point in working. I mean, if people will not work if you don't really allow them to earn money and keep it.
Do you see more currency wars happening?
They're not really currency wars. What it is that you have, I mean, people calling it a currency war because of China. You know, the rest of us have floating exchange rates. If the euro goes down 20%, that's the market. We don't say it's a war. China, by trying to peg its currency, and they, say, okay, fine, we can't hold it, we got to let it go. All of a sudden, China's engaging in currency war. It's not true. It's just, they're just going along with the market forces. I mean, people don't look. That's the problem. They're just reading the headlines. But the dollar bottomed out against the renminbi in 2013. The dollar was rising all last year against China, and nobody paid attention to it. So all of a sudden they had to let go of the peg, and everybody goes, "Oh, it's a currency war." No, they're just responding to basically that their currency has been going down for the last 2 years.
Global liquidity. Will the trend be for more and more liquidity?
No, it's basically shrinking dramatically. This is being caused by the hunt for taxes. The more I cannot open an account in Canada or any place. Largely, we have FACTA that the U.S. government put in that any foreign institution must report what an American does anywhere, and so that the risk is too great. And if they missed some account that they didn't report to the United States, then the United States can fine them billions of dollars. So they just simply will not accept an American in Europe, Asia, wherever. In fact, I had to go to Singapore, and so a friend of mine there, I said, "Listen, here, I need you to find me an apartment. I don't want to stay in a hotel." And, so I said, I'll wire you over $15,000 to cover, just go ahead and rent something for a bit. And I sent him the money, but we were long-term friends. So 2 months go by, I get over there, that money never came. I said, it didn't. I said, now you're telling me? And I had to put a trace on it. And what happens was HSBC, they do not bother, they wouldn't credit to him because it was from an American. As soon as we went to go trace it, they returned it that day. But unless somebody goes looking for money, they keep it. And they refused to put the money in his account because it was his personal account, and they couldn't guarantee I didn't have an interest in it. So they just simply won't allow it.
Long term, are you bullish or bearish on America?
Depends what your long term is. No, we're on a what I would call long-term basis. You're looking, out like 2032 or so. The West is losing the status or the crown of being the financial capital of the world, and that will move to Asia. These things they always move around. It was Babylon, moved from Babylon to Athens, from Athens to Rome, etc. And the reason Columbus was trying to get to India, because India was the capital of the world financially. People don't realize that, but after Byzantium fell in 1453, so what happens is the capital all left Europe, and it was Asia.
Martin, how can people get your newsletter?
Basically, just go to the site. A lot of what we produce on there is really free. It's for a public service. We are launching Socrates at the end of the month, so that's more of an actual system of forecasting effectively every market in the world and every individual stock. So it's all done by a computer, which is really the most sophisticated in the world as far as finance is concerned. It's it does forecasting, fairly accurately on just about everything around.
Martin, thank you very much for talking to This Week in Money.
Well, thank you for inviting me.
My guest has been Martin Armstrong of Armstrong Economics.
Unbelievable harmonies, spectacular performance. Bird Dog and the Vintage Electric Band, the ultimate tribute to the Everly Brothers and Simon and Garfunkel. In Oliver, October 2nd. In Kelowna, October 3rd. Buy online and save at ontourtickets.com.
That wraps up the show for this week. Thanks to our guests Ross Clark and Martin Armstrong, and thank you for listening. Comments or questions for This Week in Money can be emailed to info@howstreet.com. I'm Jim Goddard. We're back next week with more This Week in Money.
This Week in Money is a production of How Street Media Incorporated.